This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. As usual, I am Chris, and today is Wednesday, April 17th, 2024. Of course, that means it is DCA Wednesday, and this is a significant DCA Wednesday. They're all significant because, we keep adding to our stack. But this will be the final DCA Wednesday before the end of the 2020 halving cycle. We're just a couple hundred blocks away from the next halving, the official start of the next cycle, the new epoch. Of course, we will have many more DCA Wednesdays to come, at least as long as people are willing to sell us Satoshis for filthy fiat. But this will be the last stack of this previous epoch, the current epoch. And as a bonus, Bitcoin remains on sale today. So we're going to stack a few more sats than we otherwise would have been able to. It is a glorious day all the way around. It's a beautiful day. Well, it's been a beautiful day. It's evening now here on the space coast of Florida. We had a SpaceX launch. Another load of Starlink satellites went to orbit. And it was a gorgeous day. It was 80 degrees. That works out to about 26.6 Celsius for you in the part of the world that doesn't use freedom fractions, as they like to say here in the United States. Not a cloud in the sky most of the day. I guess at launch time there were a few clouds in the later afternoon. And if you look far enough out to sea over the, off towards the horizon, it seems like there's always clouds out over the ocean somewhere, but just a gorgeous day, which is good because it's about to get to the point where Florida just gets really hot, 96 degrees and a darn near 100% humidity is pretty miserable. If you've never been to the tropics or experienced just that brutal draining heat. I mean, I moved here from Phoenix, right? So I was there on the day that Arizona set its all-time record temperature. In fact, I was working my way through college, and I was loading semi-trailers, unloading trains, and loading them into semi-trailers for a company that I worked for. And they ended up calling it a day around noon or 1 because it was just so hot. We just couldn't function. If you imagine, it was 123 degrees that day, and even hotter in those metal box cars and metal truck trailers. But I digress. We have a lot to talk about, and of course we have to grow our stack of Satoshis. So before we get into all of that, let's take our customary look at the vital statistics. As I mentioned at the time of this recording, well, of course it is April 17th, 2024, but we're sitting at a blockchain block height of 839,693, almost 1,000 blocks higher than when I stacked for last DCA Wednesday. Of course, the last episode was recorded several days late because I was on the road. But when I did the stack, that was at block 838,692. So 1,001 blocks. It's always about 1,000 blocks a week. But it almost doesn't. This is the first time it's worked out to almost literally 1,000 blocks. If I'd started speaking just one block earlier, it would have been 1,000 blocks. I'm a kind of a numbers guy, as I imagine a lot of you are. That's kind of part of the reason why you're Bitcoiners, unless you're just here for number go up. But most of us tend to like numbers, even if you're not necessarily a math person. Numbers themselves they have a universal appeal. I'm getting way off topic way earlier than I normally get distracted in this podcast. So back to the vital statistics. Bitcoin has a current US dollar value of $60,270. That is more than $10,000 cheaper in US dollar terms than last DCA Wednesday stack. So that's really exciting. As a result, we're going to get approximately 1,632 sats per dollar. That's more than 200 additional sats per every dollar. So about 4,000 sats more than we did last DCA Wednesday for the same amount of fiat. That is exciting. So I can't wait to get that stack done before the price starts skyrocketing back up, because just with my luck, the way it works out, the price usually goes up while I'm yammering. And the longer I talk, the more Satoshis I miss out on. We are currently just 307 blocks away from the end of this halving epoch, from the next Bitcoin halving. For those of you who have been living under a rock or you're just tuning in, Bitcoin reduces the reward that miners receive for finding the next valid block by half every 210,000 blocks, and the next halving is expected, well, not expected, it will occur at block 840,000, which is expected to be on April 19th. Up until now, that had just been a guess, but as we get closer, it's looking like it's more and more committed to being April 19th. I know a lot of you are hoping for 420, and that's still possible. You know, blocks come in at an average of 10 minutes, and of course, they're coming in faster than 10 minutes this week, and usually they're coming in faster than 10 minutes because the network is growing almost as fast as the price, sometimes faster, or preceding the price increases, as is usually the case, or has been the case in the past anyway. And so it would be weird to think that the hash rate would slow down, but because it's an average, it's a lot like flipping a quarter, flipping a coin, as I like to say. It's possible the last block could take 2 hours, that we could get a string where, you know, several blocks come in at 45 minutes to an hour instead of 10 minutes. And maybe it'll get pushed back to 420, and Elon Musk and the rest of you 420 fanboys will get your wish. But either way, it's looking like it's going to be late in the evening here in Florida on April 19th. So I guess we won't find out till it happens, because, you know, there's all by the same logic that those blocks could stretch out and take longer, they could also come in super fast back to back, and we could all be getting ready for the Bitcoin halving, look down at our phones and find out we missed it. We'll get into more of that in a bit, but basically for the halving to happen on April 20th. Now, Clark Moody's dashboard says that blocks would have to average 10 minutes and 40 seconds to bump it to April 20th. That's a big change. That's significantly slower than they've been coming in. But we'll get more into that in a bit. At Bitcoin's current US dollar value, we have a market capitalization of $1.21 trillion. And I know that seems disappointing, especially since we've slipped under the silver market cap. Silver has a market cap of about $1.32 trillion. Remember when we were talking about when we finally retake $1 trillion market cap? I mean, back as early as Valentine's Day or the beginning of February, just less than 2 months ago, or right about 2 months ago, Bitcoin was in the $850 to $870 billion range market cap wise. So it's amazing how when Bitcoin pumps, all of a sudden that becomes like your new mental price floor. And when it goes down, even though you might be at an all-time record high and it might be double what it had been, you know, not too terribly long ago, we are like, oh, Bitcoin down. But then again, when you're when you're getting ready to stack, if it's your DCA day like it is today, we're also like, yay, because we're going to stack more sats. And we're going to stack sats at a discount. We're going to stack sats for hopefully significantly cheaper than we did last week. You know, I'm personally hoping the price goes down while I'm yammering. That's never worked out in the past. That's just the way, you know, it seems to go, but who knows? For those of you who value your wealth in shiny yellow rocks, it will currently cost you 30.1 ounces of gold to purchase just one Bitcoin. Obviously, the price of Bitcoin has retreated a little bit, so you can purchase a Bitcoin for 4 less ounces of gold than you could just last week. So Peter Schiff, if you're busy, if you're not busy, if you're done mocking Bitcoiners, if you're done mocking Natalie Brunell for being a Bitcoiner and for not dumping her Bitcoin, your price is 30.1 ounces of gold. If you don't know what I'm talking about, Natalie Brunell was on Fox Business, and of course so was Peter Schiff, and I don't know if this was planned or if they ambushed each other and put them both on at the same time. But first, Peter Schiff was on, and he started talking about, well, if Natalie was smart, she'd dump all her Bitcoin, because if she doesn't dump it now, she's going to be jumping it for much, much less as the price of Bitcoin crashes, basically. And then they brought Natalie Brunell and said, hey, what do you think about that, Natalie? And she took him to task, schooled him, basically saying, hey, you know, unlike some people, we're not obsessed with whether Bitcoin's worth more than gold or not, because, you know, we like gold. We're improving on gold. You know, Bitcoin is electronic gold. And I'm butchering the quote. If you haven't seen it, it's out there on Twitter, or you can just Google search it and look at it. It's always fun to watch someone put Shifty in his place. So I was noticing that gold is down today as well too, just a tiny bit. It set a new all-time high, and when we talk about gold's new all-time high, we talk about going from $2,200 an ounce to about $2,400 an ounce. It's like, yay, you know, Bitcoin went up, or gold went up 5%. Big whoop-de-doo. You know, if you look at where gold was, you know, 5 years ago, have the stats specifically in front of me, but it was in maybe the $1,800 or $1,500 an ounce range, whatever it was. I think it was closer to $1,800 an ounce because it hovered there for a really long time before it broke 2,000. And so 2,000 to 2,400 is $600. So 600 of 1,000 would be what, 60%. So gold's up 30%. Light the candles, pop the champagne, 30%. I mean, that's a good gain. When you're talking about, interest on your savings account at Bank of America or whatever, earning whatever, nothing usually ever since 2008, that was pretty much the last time you ever saw interest on a savings account. So maybe according to what you used to get on a savings bond, that's a good return. But when you look at the returns that even the stock market's had in the last year, 30% is nothing to celebrate, Shifty. And that's enough attention on that clown. Currently, one Bitcoin will purchase you 3,370 large pepperoni pizzas from Papa John's. That is one pizza every day for more than 9 years. A little bit fewer pizzas than last week as the US dollar values retraced a little bit. But, pizza volatility is bad. It's just one of those things when you're talking about an asset that moves in $1,000 swings, sometimes in minutes. Still a lot of pizza. I still firmly believe that as we're heading into the next halving cycle, that we're going to get to the point where if you wanted to eat one pizza a day for the rest of your life, you could never spend a full Bitcoin on pizza. And that's really cool. You'd have to have a pretty big pizza party to spend a full Bitcoin on pizza. If you're buying yourself one pizza a day, it may be to the point already where that would be physically impossible. You just run out of time before you ran out of Bitcoin. And Bitcoin would increase in value so fast that would be an infinite amount of time. All right. Speaking of Bitcoin and speaking of the blockchain and speaking of on-chain activity and speaking of Clark Moody's mempool, according to Clark Moody's teeny weeny mempool, as Marty Bent likes to call it, there are currently 65 blocks worth of transactions pending in his mempool. Obviously, he has a limit on his mempool, so there's more transactions out there than that. But since we've been talking about Clark Moody's mempool, and his mempool size has usually been enough to fit all the pending transactions in before the ordinals inscriptions, shenanigans, etc., stamps, whatever. We're going to, for the purposes of consistency, we're going to continue to talk about that metric for the time being. And who knows what happens if, he could blow that out of the water by changing his mempool size, or things could go back to normal when the ordinals and inscription shenanigans finally ceases. Although there's more of that to come on halving day. We'll get into that later. Maybe not this episode, but I'm sure people will be talking about it in abundance, at least when it happens on halving day. For those of you who need to make an on-chain transaction, if you need to guarantee your transaction is included in the next block, Clark Moody's dashboard fee estimator is saying you need to include a fee of 142 sats per VByte to make that happen. That is a lot more than last week when 111 sats per VByte would have gotten that done, and the week before when just 35 sats per VByte would have gotten that done. It is still saying that if you have a little while to wait, that a fee of just 10 sats per VByte will be mined within a day. That's less than 10% of the immediate fee. So if you have to make a really, really, really super important transaction, maybe it's going to be pretty expensive. But if you're just consolidating, or if you're not using the Lightning Network, there's no reason why 10 sats per VByte probably shouldn't get mined, especially as we're heading into the evening and fee pressure tends to back off. Likewise, along those lines, he's saying if you have up to a week to wait, that you can still include a fee of as little as 5 sats per VByte, and that transaction will eventually get mined. Mempool.space, as usual, is telling a slightly different story. They're saying for a high priority transaction that needs to be mined in the next block or two, a fee of only 52 sats per VByte will get the job done, actually less than last week when they were recommending 57 sats per VByte. 52 sats per VByte at the current US dollar value of Bitcoin works out to about $4.46, so $1.20 cheaper than last week when it would have cost you 5 extra sats per VByte and Bitcoin was significantly more expensive. Along those lines, a medium priority transaction is not a whole lot cheaper, recommending a fee of 51 sats per VByte. A low priority transaction, they're still recommending 47 sats per VByte, and they're actually recommending a higher fee than Clark Moody's dashboard for that no priority transaction, recommending a fee of 12 sats per VByte. Of course, if you have to make a transaction on chain, but you have a little while to wait, or even if you don't have a little while to wait, but you want to see what happens, you can still shoot off one of those you can lowball your fee and see what happens, and then make sure you're using a wallet that allows you to use replace by fee or child pays for parent, where you can change that fee Make sure you know how to do that and that your wallet will let you do that, though, before you send that transaction off, because you don't want to end up getting stuck where your transaction hangs up, especially if it's one where you're purchasing something and that person's waiting for the sats and they're not going to release what you're purchasing until the sats show up. That would be weird if that took 2 weeks and ultimately never got mined. So fortunately, I have never had an on-chain transaction take more than 2 blocks to confirm. In fact, everyone I can remember recently, I've lowballed, and they've all been included in the very next block. So I guess that's a you do you thing. Of course, I've also recommend, if you have time to wait, that you send your transactions in the middle of the night or on the weekend in the middle of the night when fee pressure tends to be a little lower. You know, a lot of the on-chain activity comes from traders. It comes from in the morning or super early in the morning. Oftentimes you'll see the exchanges or whatever batching transactions, making big transactions, and that drives fees up. But since most of the fee pressure seems to be coming from the Europe and the United States when it's late at night in the United States, and the middle of the night in Europe, those fees tend to come down. But I digress. I'm getting off on a tangent, and we haven't even got through our statistics. Speaking of statistics and speaking of on-chain activity, that metric that you know has been my favorite for most of the history of this podcast, pretty much all of the history of this podcast, Bitcoin's 24-hour average transaction rate is down significantly from last week. Last week, there were an average of 6.43 transactions per second on-chain, and that's down to 4.59 transactions per second. So a big drop off, almost 50%. Since last Wednesday, and that once again corresponds to lower Bitcoin price. So that metric is still holding true. The actual numbers might have changed a little bit because back in the day, a lot of activity was more than 3.14, like pi, 3.5 transactions per second for sure. Anywhere near 4 was considered just banging. But since we've been getting a lot of spam and mempool bloat, that metric is currently a little inflated. So 4.59 transactions per second is actually pretty slow, especially since we've seen it, over 7, almost 8 transactions per second at its worst. All right. Speaking of transactions and the blockchain, we are just 979 blocks away from the next mining difficulty adjustment. That is fortuitous that's going to occur just a couple days after the halving, for reasons that I will also get into in a little bit. Our last difficulty adjustment was almost 2 weeks ago, and that was an increase of 3.9%. The current adjustment looks like it's going to happen April 24th, so maybe 4 or 5 days after the halving. And depending where you get I'm looking at 2 different sources of data right now, and they actually almost agree for the first time I've ever seen that happen. One source says it's going to be an increase of 2.59%, and the other says 2.6%. So that's a statistically insignificant difference. So that's really cool. But unfortunately, if you're mining at home, you're going to earn about 2.6% fewer sats for your hash rate after April 24th. Unless, of course, miners turn off when the halving, reward is reduced and that changes. But again, I'm getting ahead of myself. The reason why we're looking at an almost 2.6 or 2.6% increase in difficulty is because blocks are currently averaging 9 minutes and 46 seconds instead of the 10 minutes that Bitcoin shoots for, and almost a full minute faster than they would have to average for the halving to get pushed off until 420, unfortunately, for those of you 420 fans. Okay, before we get into the news, I want to take the time to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Of course, Podcasting 2.0 allows you to support your favorite podcast through the value for value model by either streaming sats on a per-minute basis or by sending a boost, which is like a shout out where you tip the podcast some sats by sending them a message, but the message is a Lightning transaction, so you can tip the podcast and give us a shout out. Of course, if you do so, we will read it on the very next episode of the Bitcoin Bulletin Podcast, unless there are extenuating circumstances. We do not have any boosts to read this week unless one of you snuck one in on me as I've been talking, because right before I pressed record, I did double check and we did not have any boosts, at least that showed up on our podcast Fountain wallet. But thank you to those of you who are listening. Thank you to those of you who have supported the podcast in the past and will continue to do so from time to time in the future. And speaking of listeners, our geographic distribution of listeners once again remains unchanged. Our top 10 countries are as follows: well, more than half of you, number one continues to be the United States. No surprise there. A lot of Bitcoin activity takes place in the United States. I'm in the United States, so it would make sense that most of my listeners would be here in the United States, and that remains the case. So thank you to all my fellow Americans who take the time to listen every night. And we might have picked up one extra American if you're the person I was speaking to in Texas just last week about Bitcoin and about this podcast. Hello, thanks for listening. Hopefully you like the podcast, that you're getting some entertainment value out of it, or maybe learning something you don't already know. I know you're not maybe a no-coiner, but you're not new to Bitcoin. You've been doing your 1,000 hours of research, as they say. So if you're listening, thank you. Welcome aboard, and hopefully you enjoy the podcast. Number two, as usual, is still Argentina. So hola, amigos. Muchas gracias. Number three remains Germany. So Dankeschön, mein Freund in Deutschland. Guten Abend. Number four remains Luxembourg. So Guten Abend or Morgen to our friends that speak Luxembourgish. Dankeschön. Number five remains Canada. I often say I hope it's getting warm up there, but I did listen to a Canadian Bitcoin podcast just the other night, and they were talking about golfing and all kinds of outdoor activities. So apparently the weather has gotten a lot nicer up there. Eventually it's going to flip on us to where people are jealous of me on the beach here in Florida because the weather's gorgeous while everyone is scraping ice off their car windshields in the colder climates. And you'll be outdoors with the flowers and the grass and the birds chirping, and I will be sitting in an air-conditioned building sweating like crazy. So that's the flippening that you can guarantee happens twice a year, the weather flippening. So thank you to those of you listening in Canada. Number six remains Spain. So muchos gracias, amigos, en España. Hola. Number seven remains Colombia. Hola, amigos. Muchas gracias. Number eight remains Sweden. So hey. To those of you listening in Sweden, thank you very much. Number nine remains United Kingdom. So thank you for those of you listening in the United Kingdom. And number 10, as always, consistently remains Venezuela. So hola, amigos in Venezuela. Muchas gracias. And of course, we have listeners in many, many, many other countries. And that's really flattering because it's cool to know, because Bitcoin isn't just for people in the United States or just for people in Europe. And it's really cool to see that we have listeners in places where Bitcoin can maybe do you more good right now than in countries where we have a stronger fiat dollar and a stronger economy than certain countries around the world where you may be experiencing hyperinflation or an unreliable currency for other reasons, or an uncertain economy for a variety of reasons. It's really cool to know that for those of you who might need Bitcoin more than I do, that you're out there and that you're listening, and hopefully you're building that stack, because it's going to improve everyone's life. But there are some people who it will help more immediately, and that is really cool, because that's what Bitcoin's about. It's that life raft. It's that escape valve, the escape hatch. And a lot of people, it's harder to orange pill someone in the United States or Europe oftentimes because they just don't see why they might need a stable, unconfiscatable currency. Because even in Canada, until the Canadian trucker protest, when bank accounts started getting frozen and people started getting debanked, or even in Europe or the United States where people are getting debanked for political opinions, until very, very, very recently, that was something completely unheard of. That was just something that in a million years nobody would have ever thought was a possibility in the United States and Canada and certain European countries. So those gloves are off, unfortunately. And boy, we saw Bitcoin shine. The only problems that arose with Bitcoin during the Canadian Trucker podcast were use errors by people who were trying it for the first time. It had none of the things that happen with Bitcoin negatively had anything to do with Bitcoin inherently. And so I'm getting on yet another tangent. That seems to be what this podcast is. Maybe I ought to change the name to the Bitcoin Tangent Podcast, or just Tangent. Be an interesting name for a podcast. The Tangent Podcast. All right, on to the news. Of course, the big news right now should be the looming halving, the miner reward halving, especially for people concerned with price, because that is ultimately the driver of the 4-year bull run cycle. The miner reward, which is the majority of the supply of new Bitcoin for sale on the exchanges, it usually comes from miners that have to sell Bitcoin because it's how they're paying for their business expenses. And in just about 48 hours, it's going to be reduced from 900 Bitcoin a day to just 450 Bitcoin a day. And I don't need to remind you, maybe I do need to remind you, that the ETFs have been routinely scooping up more than 10x that every trading day. There have been days where it's more like 100 times the new daily supply of Bitcoin scooped up by just one of the big Bitcoin ETFs. That being said, the US dollar value of Bitcoin is down rather significantly, more than 13% this week and 17% from its all-time high just over a month ago. This was initially attributed to fears over the potential of a wider outbreak of war in the Middle East and maybe other places. And then, of course, we had the higher than expected inflation numbers, which poured gasoline on the FUD fire among the normies anyway, and the traditional Wall Street investors, the traditional Wall Street media, et cetera, who still view and talk about Bitcoin as a quote unquote risk asset, which I find amusing because if you know anything at all about Bitcoin, remember Satoshi created Bitcoin basically in response to the great financial crisis as a safe haven from the fiat economy. Ultimately, this is the environment that Bitcoin was built to shine in, that escape hatch, that life raft. So while Bitcoin is being treated as a risk asset when it is ultimately the safest asset you could possibly be in, it's the only asset that can't be debased. It's the only asset that can't be confiscated if you're doing it right. So while people are treating it as a risk asset, those are opportunities. With the price of Bitcoin coming down by 17% from the all-time high, instead of exploding higher and starting that epic face-melting bull run early, now we have an opportunity to scoop up 17% more sats. So that's awesome. Whether the price decline slowed interest in the ETFs, or if the momentum is just wearing off because, hey, these ETFs, these Bitcoin ETFs that just launched, about a month ago, they've been setting records, like knocking every record out of the ballpark. And, but it's been a while, and the honeymoon period eventually wears off. Everybody that was just dying to get in has had the opportunity to do so. Not everybody. There are certain big classes of investors who are barred by law or by policy from investing still. There are funds that have to wait till an asset's 3 months old, 6 months old, a year old before they're even allowed to invest in it. So to that extent, the ETFs are still brand new, but the people that were waiting to, that were chomping at the bit, that were waiting to purchase Bitcoin when it came right out of the gate, they've had plenty of time to do so. So it would not be unusual to see the inflows slow down. And in fact, we wouldn't even really we've had 3 days worth of net outflows from the Bitcoin ETFs. Of course, in general, most of the ETFs have still been performing admirably. It's the holders of the Grayscale Bitcoin Trust that was converted to the GBTC ETF that have continued to dump their shares. And despite the majority of bankruptcy-related sell-offs apparently having wrapped up, there's still a lot of sell pressure from GBTC. And while it's reduced, it's been enough that the last couple of days it drug the net amount of Bitcoin either coming into or moving out of the ETFs negative. So maybe that has something to do with the price decline, or maybe it's because of the price decline. It is still too soon to tell. While, for example, there was only one other ETF besides GBTC to have an outflow yesterday, GBTC saw almost $80 million in outflows, which is more than enough to counter BlackRock's otherwise not too shabby inflows at $25.8 million. If it weren't for GBTC, which we could spend a whole episode talking about that, there'd still be positive inflows, at least up and through yesterday into the ETFs, because ARK had a very small ETF, and other than that, it was positive. Either way, BlackRock is still, I'm sure they're just thrilled with the performance of their Bitcoin ETF, because they've raked in billions of dollars. It's been the best performing ETF by many metrics of all time. And if that's your business, if you're in the business of producing ETFs, they've got to be popping champagne corks. And maybe with a little bit of pressure coming off, they're having the opportunity, if they want to stack more Bitcoin more cheaply, to sell off as ETFs. Of course, they're not obligated to purchase Bitcoin until they have a mismatch big enough to generate a new block of ETF shares. But again, that's a topic that is a little more in depth than I want to get into about ETFs. As of right now, as of recording time, the ETF numbers for today are not available yet, but it's generally assumed that we're going to see another outflow day in ETFs, and all the stock market indexes were all down significantly. Even Peter Schiff's gold was down today. So probably going to see another outflow day in the US Bitcoin ETFs. And speaking of ETFs, on Monday, it was announced that Hong Kong regulators have approved the launch of spot Bitcoin ETFs in Hong Kong, which is really weird because we've seen, crypto trading in general pretty much banned in mainland China. Mainland China controls Hong Kong. So I don't know if this is a way of testing the waters, a trial balloon, if they're just trying to save Hong Kong's significance as a finance capital of the world, which they've been kind of cratering with their kind of heavy-handed takeover of Hong Kong, their violation of the agreement to let Hong Kong be autonomous. But various sources have been talking about what the significance of the new Hong Kong ETF will be, and it's rumored or speculated that when this new ETF goes live, and I think it begins trading on the 30th of this month, so a couple weeks away still, that it is expected to attract an additional $1 billion worth of inflows above and beyond what the U.S. Bitcoin ETFs are attracting. So, this might not be as quote unquote important as the U.S. Bitcoin ETFs, but every SAT purchased has an impact when you do not have an elastic supply. And I remind you, even if the supply of new Bitcoin being mined remained exactly the same, another $1 billion of buying pressure is not insignificant. And this is timed to happen after the halving has already reduced that supply in half, or the new supply. It won't reduce the supply in half right away because a lot of these miners have war chests of Bitcoin that they've been mining for years. So just because their new supply of Bitcoin will be cut in half, it doesn't mean they'll be dumping more Bitcoin because their expenses will stay roughly the same, at least in the near term. So looking at ETFs, I guess that's enough about ETFs. Everybody's obsessed with ETFs. From the get-go, we've said, and many people said, that the ETFs were going to be significant. They would have a significant impact on Bitcoin, and indeed they have. But again, we didn't really expect to see the true impact of the Bitcoin ETFs for as much as a year, maybe even longer, because, as I said, it's a new asset, and there's a lot of things that cannot, by law or by bylaw, by policy, buy these ETFs yet. So, and this is some of the big money, not just normies that are investing in their 401ks or their Roth IRAs, huge funds, endowments, things like that. We're talking billions. We're talking more money than's been pumped in cumulatively into the ETFs easily. That's enough about ETFs. Last episode, we reported that Fake Toshi, CSW, had dropped his appeal in his Norwegian lawsuit against Hodlonaut. So as you know, Hodlonaut won his Norwegian case where he was being sued for defamation for calling CSW not Satoshi, saying he was a fraud, etc. Yesterday, of course, he had an appeal pending, and CSW had announced that he was dropping that appeal. Yesterday, it was revealed that he has since abandoned another case. It was reported by WooCoin, Fake Toshi Getting Wrecked Enjoyer, which is at #hascend P6. It's HASCEND P6 on Twitter. Breaking: Craig Wright. Craig Wright crashes and burns as he drops his $5 billion at FX FBX V6 pineapple hack claim against Bitcoin developers. Congratulations, devs, and get wrecked, fake Toshi, hashtag BSV. And what this is about was CSW was suing the developers, basically saying that he had been hacked, that the Satoshi coins, basically the pineapple fund coins or whatever, had been stolen, and he wanted to force them to write a hard fork that would give him control of all of those Bitcoin without having the keys. And of course, that lawsuit's now been dropped. Even if he had pursued that lawsuit and for some unknown reason actually won, he showed a tremendous non-Satoshi level of misunderstanding of Bitcoin because, as you know, especially if you're a node runner, they can write whatever version of Bitcoin Core they want, introduce whatever BIPs they want, and that has nothing to do with what all of us node runners are running because Bitcoin doesn't have automatic updates. It doesn't get push updates. And it doesn't stop working if you don't update it. Like, certain phones might stop working after a while. You won't be able to run certain apps if you don't update your phone. You can continue to run whatever version of Bitcoin you want. I sure as hell wouldn't run a forced, version of Bitcoin on my node. So it was never going to happen. And even if they had done so, it was actually hysterical because a lot of those coins aren't in those addresses anymore. Because from the get-go, because he didn't really own those coins, we had the one person sign the message, he moved the coins and signed a message or whatever, it said, P.S. Craig Wright is not Satoshi. Many of that has happened with many of those addresses. So a lot of those addresses have already moved. So by saying he would have control over those addresses, well, they're empty. So it was moot. It was mood either way you play it. Anyway, this whole deal, him dropping cases left and right all of a sudden after his huge loss to Copa in England, has led to a lot of speculation about whether this was due to his notorious financial backer pulling the plug. Does he just not have the funding anymore? Or there's also speculation this might even be a last-ditch effort to avoid jail time by accruing even more testimony to use against him in any potential perjury-related proceedings. If you remember, Copa said that they would be asking for criminal proceedings for abusing the court system, for perjury and abusing the court system, by using the court system to try and defraud people. So it's a distinct possibility he'll be looking at a criminal trial. And if that's the case, again, I'm not an attorney, but what I know from my dealing with attorneys, or what I do know about the law, is the first thing any attorney is going to tell you is to shut the F up. Do not, first of all, they would have told him never to testify, which clearly he did anyway, but it wasn't a criminal proceeding, although it might turn into one. But, they say never say, in the United States especially, you have the right to remain silent. You don't have to testify against yourself. You don't have to talk to the police. You don't have to provide evidence. Why footgun yourself by going to trial and having to sit there on the stand and make potentially more false statements about his forgeries, his false evidence that he's submitted in court that have been proven to be forgeries, that he even admitted were forgeries. Of course, he blamed all kinds of reasons why they were forgeries, but he has submitted, from what I know of the trial, he admitted to submitting forged documents as evidence. That's a crime almost anywhere. I'm not an expert on English law, but I'm pretty sure that's illegal there. Many people expect him to go to jail, and maybe that is the reason he's dropping those cases, not that his financial backer has pulled the plug. Although it becomes more and more obvious that the writing's not only on the wall, but it's time to pay the piper. At some point in time, he's going to be abandoned by his golden goose, if it hasn't happened already. And who knows? Because I don't have any special insight into that relationship, and I'm just reporting the little bit that I know from watching from the outside in amusement. Internally, there's been additional drama related to potential changes to the Bitcoin protocol, with heavyweights like Michael Saylor calling for the ossification of the code, even going so far as to oppose supporting Bitcoin core devs out of the fear that if writing Bitcoin improvement projects proposals, if developing the Bitcoin code became their full-time job, if their full-time job was to write code, they're going to write code. And they're going to come up with changes just for the sake of staying busy, and that, this might lead to unintended consequences. And who knows? We've certainly seen unintended consequences in the past. The other end of the argument has been championed by Matt Odell, who has called Saylor out repeatedly for not supporting developers in the first place. I can certainly see both sides. I love Bitcoin exactly the way it is. I'm interested in Bitcoin because what we have right now, I think maybe I can be persuaded that certain things might be good changes in the future, but I'm not in a hurry. There's nothing I see about Bitcoin that needs to be changed right now. It is working exactly as it was intended to work, as is. And even if there are slight alleged improvements that you could tweak with around the edges here and there, we've seen before that you have things. I mean, it's not just unique to Bitcoin. Every new law that is proposed, we say, that we see unintended consequences. When people tinker with the economy, we see unintended consequences. And right now, I think the only thing that could wreck Bitcoin is if we came up with some great new idea that the devs or the VCs behind the devs convinced people to adopt, and it messed with Bitcoin's immutability. Or, Bitcoin's major value prop comes from its immutability. It comes from the fact that Bitcoin is, that we know that Bitcoin is going to be the same tomorrow as it is today, that it can't be confiscated, that there's only going to ever be 21 million, etc. And freaking mucking with the code can diminish that. And not just by introducing the unintended consequences, but just by instilling or solidifying the fear that that is even a possibility can diminish Bitcoin's value proposition. One of the reasons Bitcoin is the only crypto out there, it's the leading coin, it's Bitcoin or S coins, and the reason for that is because it was created, it was released on the wild, and it's immutable. That it has certain guarantees, it has a history, and people know that it will continue to be relatively the same forever. And if that, we look at like Ethereum, for example, where they just scrapped Ethereum completely and just forced everybody to go to Ethereum 2.0. And you can't do that with Bitcoin. And if you could do it with Bitcoin, that would seriously degrade its value proposition. And Saylor, I believe, he termed the coin cyber hornets. I'm pretty sure he was the first one to use it when he spoke about Bitcoin's value proposition. In fact, it's his pinned tweet on Twitter from back in September of 2020, where he said, Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy. Everything about Bitcoin is based on its resistance to change. You can't rewrite the code. You can't change the block. You can't rewrite the block. Even there might be, a situation where two miners find a block at exactly the same time in the chains. You got a little bit of a split before you have a reorg, and that does happen from time to time. But Bitcoin sorts itself out. It has a protocol for doing so. But I mean, if you could go back and just completely rewrite the code like other cryptos have done, where there's been a hack and they just introduce a change that says, well, that hack didn't happen anymore. Stuff like that would destroy Bitcoin's core proposition, which means if you've got your Bitcoin, no one can take it from you, not even the devs. And they can't, in theory, because if they ever introduced anything that brazen, that antithetical, that anti-Bitcoin, then I for certain wouldn't run that version of Bitcoin Core on my node. And I think most people would not. There'd certainly be a rebellion. Best case scenario, they'd end up with another S coin. They'd end up with another Bcash, another altcoin, because it would fork and it wouldn't be Bitcoin. Of course, the other side of the other side of the coin is there is a lot of maintenance work to be done on the protocol, and it's always good to have as many eyes as possible looking at the code so that we're never blindsided. So if there is a bug out there, that people find it. Of course, there is at least one bug in the code that we know about that will eventually have to be fixed. And that's to patch a bug that will basically cause Bitcoin to run out of blocks after block 5,101,541, which I think is projected to happen in the year 2106. So basically, there's no big rush to push a code change that's not going to happen for 100 years, 80 something years. Quite honestly, it's a good idea to wait until the people who will be alive when that would be an issue to be born first so they could have some input, because most of us are not going to be around in the year 2106. And it would be nice for the people that will be affected by Bitcoin in 2106 to maybe be able to have a little bit of input. I mean, we don't have to wait till 2106, but maybe 2100 or 2096. 10 or 20 years before instead of 80 something years before. There's no need to rush it in any case, is what I'm saying. Move slowly. Do not move fast and break things. Other scam coins operate on the move fast and break things principle, and that is the opposite of what we need to be doing in Bitcoin, the opposite of what we are doing in Bitcoin. I don't think I actually need to convince any of you of that, although there is certainly a heated battle going between Saylor and Odell. One of the people I like to follow, and one of the accounts I like to follow on Twitter, and it's still Twitter to me, just like it's still Lakeshore Drive and the Sears Tower in Chicago, is Ecoinometrics on Twitter. And that's at Ecoinometrics. And they've been posting a chart that compares Bitcoin to the previous halving cycles. And so we're on the third halving cycle now. So his range is only between the first two cycles. So it's not a really strong set of data to adjust a range to come up with an average based on, but it shows the range, which is the first cycle and the second cycle, and then there's an average trajectory, and then the third cycle is a separate line, an orange line. And for the first several months of the after the 2020 halving, we were solidly right up the middle, and then somewhere at the beginning of 2021, it broke significantly below the range, although I'm talking about a chart. So if you want to go to Ecoinometrics and look at the chart I'm talking about, you shouldn't have to scroll very far because he updates it fairly regularly. But you can see that, the path, Bitcoin's actual trajectory, while significantly lower, actually followed, other than the double top, follows pretty closely. When the range is going up, it's usually going up. When the range is going down, the average is going down, it's usually going down. And that's a remarkably snug fit, but significantly below that. It is interesting to note two things. As many people, including Dr. Jeff Ross, have pointed out many, many, many times, they think this last cycle was an outlier. There was the China mining ban right in the middle of the bull run that they think knocked some of that momentum off of there. If you remember, I think the bull run started a little early because there was the big Tesla and Elon hype, and then he backpedaled like almost as soon as he announced that he was going to be accepting Bitcoin for Teslas. They rescinded that. And I think so there was that hype, which was a little premature. In fact, you can see on that chart that the orange line goes up and blasts right through the average trajectory right about the time that Tesla and Elon made those announcements. And then it crashes back down, like almost not 50%, but significantly. It went from like 66,000 back down to about 30,000. And then later in the fall, we had the second run up to 69,000. And there were a lot of extenuating circumstances, black swans, so to speak, that influenced that. So the argument that Dr. Jeff Ross makes is that shouldn't have happened, that normally he would have expected this to be right up the middle, more consistent with the previous cycles. And as a result, he thinks we're going to see just maybe above average performance out of this cycle. And again, nobody has a crystal ball. Even really, really, really smart people who do this for a living, they don't know. They're giving you their best guess. And it's all it is a guess. But I could see that. I could buy that. I could see how that would be reasonable. But it doesn't matter. Even if this cycle performs, quote unquote, as poorly as the last cycle, well, you look at that chart. So where were we around the halving? We were below 10,000, and it went from, we'll round up to 10,000 up to 69,000. So that's almost 7x the price on halving day before we hit the peak. And so let's assume, we're right around 61,000 right now, but let's round down to 60. Say we'll assume on halving day, which is coming up fast, that we're at a price of 60,000, and we 7x. We just 7x. Let's say we just 6x. Let's say we don't even do as good as next time. We 6x from 60,000. We're still talking $360,000 Bitcoin. I don't find that disappointing at all, plebs. That's pretty darn amazing in my book. So I think their worst case scenario is still better than a lot of people hope for. There's plenty of people out there that would be just absolutely thrilled if we actually broke 100,000, or 250 is what a lot of people talk about as what they would see. They would think their moon would be 250. So 360,000 or more. If we just do what the last cycle, which was the disappointing cycle, did, I think is pretty exciting. Okay, on to some good news. This is Bitcoin adjacent, only because it's Bitcoin, I think, and a Bitcoiner at least, that made this possible. Yesterday, Nayib Bukele tweeted out that Google inaugurates its offices in El Salvador, posted a video that Google now has a campus or an office, a huge, beautiful skyrise in San Salvador, El Salvador, which is pretty darn cool for multiple reasons, not just because it shows that Bitcoin is changing that country. Well, mainly because it shows how Bitcoin and a Bitcoiner, Nayib Bukele, and a Bitcoin mindset is taking what was definitely considered, it was the most violent country on earth for many, many years. It was a country that embroiled in a civil war for the longest time, guerrilla warfare, overrun by gangs. That's what, that's the homeland of MS-13, which is actually a gang born in the barrios of Los Angeles here in the United States, but that's a different story. MS-13 was in control of large swaths of El Salvador before Nayib Bukele came along. In addition to his crackdown on crime, I think his introduction to the Bitcoin standard was responsible for a groundswelling feeling of optimism and hope in that country. And certainly his policies enabled Google to bring their offices to El Salvador, or to bring offices to El Salvador. So that's really cool. I mean, plebs, if you're thinking about moving to El Salvador, and you never know with Central America, this is new. It's not a guarantee that there couldn't be something really awful that were to happen in El Salvador and they could lose everything they've gained. They could do that whole 1 step forward, 2 steps back, and end up worse. Again, this is another thing no one has a crystal ball about, but it would not be out of the question for a Latin American country to have a coup or something along those lines and just descend into chaos. But give the man his props. Regardless of what people say about Nayib Bukele, he has radically transformed that country. I think in large part because of that Bitcoin mentality. I know he was doing great things before he introduced the Bitcoin standard, maybe even before he became orange-pilled himself. But Bitcoin has certainly played a huge role in El Salvador's renaissance and its rebirth. And that's really cool. So congratulations to all of you in El Salvador. It's really cool to see that your country is becoming more and more prosperous. It's safer. It's one of the safest places to be in the United States now, at least in this hemisphere. If you're thinking about moving to El Salvador, I've looked at the property values, and it used to be you could pick up a place on the beach in El Zonte for dirt cheap by American standards. And the last time I looked, it's getting almost as expensive as here in Florida. Not Miami Beach, mind you. You're not going to have to spend $100 million to buy an estate on the beach in El Salvador, but you're not getting one for $80,000 anymore either. And that's cool. And not cool that you're going to get priced out, but it's cool that El Salvador is prospering. Of course, the most important news is that despite all that's going on in the world, Bitcoin keeps adding a new block every 10 minutes, marching ever closer to that next epic. So back to the halving. What should you expect? What is going to happen on April 19th or April 20th? Well, the first thing that's going to happen is TikTok next block. Bitcoin will continue to function exactly as before, exactly as always, except for one main difference, and that its monetary inflation rate will drop below 1% for the first time, officially becoming the hardest asset ever. Every year, more gold is mined out of the earth, and it works out to about 2%, but that number is in flux because, when gold falls in value, certain mines become unprofitable or they get played out and they get shut down. But then when gold goes back up in value, all of a sudden new mines come online, old mines come back online. They've even been circumstances where Bitcoin was so profitable, gold was so profitable that they were going back through their old scrap piles, their old tailing piles, and remilling the old ore, or the old tailings for ore and extracting ore that would have been too expensive to extract previously. But the point being, its rate of supply was elastic, and it was largely dependent on price. As it became more expensive, it was more profitable to mine, so more would flood onto the market. Bitcoin at less than 1% inflation will officially be the hardest asset ever. It will still have a slight monetary inflation. Of course, those 21 million Bitcoin, in theory, they already exist. They're just not issued. So the issuance rate will fall significantly. Second thing is the price may go down. In fact, it probably will go down. In the past, it did just that. After the halving, the price actually retraced a little bit, and then it started coasting gently back up by the summertime. And it was something like a sell the news event. It took time for the price discovery to occur. The halving is not, nor has it ever been, priced in, and it takes a while for supply and demand for supply and demand to adjust. For a lot of the Bitcoin trickling onto exchanges, as I mentioned, has already been mined by the miners, mind you, but they have it in their treasuries, and demand isn't just going to change overnight at the halving, so it takes a while to price that in. Normies, however, will expect the price to skyrocket the moment the halving occurs, and they will be disappointed when it doesn't. In fact, you'll see the haters come out big time. I guarantee Peter Schiff will come out and do interviews, or at least tweet and gloat about how, well, they had the halving and what happened? Bitcoin's down 2% or whatever. Bitcoin didn't skyrocket. Ha ha ha. Fooled you. Guess you were idiots. Something along those lines. Next, we'll probably see the miner death spiral FUD again, although I expected to see it harder and stronger by now. It'll probably make headlines for a while, and that's basically the FUD that says, well, the miners are all going to go bankrupt, and because they start going bankrupt, they're going to turn off miners. They're going to be less profitable anyway. They're going to switch off their less profitable miners, and that's going to slow the network down, and we're not going to get to that difficulty adjustment, which is going to make miners less profitable, which means more miners are going to turn off. Ooh. And then eventually we'll never get the difficulty adjustment, and the blockchain will grind to a halt as hash rate plummets to the point where we never find the next block. And that FUD has been floated every halving. It certainly was floated in plentifully last two cycles, I remember distinctly. But the hash rate will continue to increase largely. There will be some miners that shut down their less profitable miners. As the Antminer S9s are already mostly unprofitable. We'll probably see them go away. But the thing to remember is newer generation miners are just starting to get delivered. So for every unprofitable miner that gets turned off, a miner that is infinitely more profitable will get turned on. And Antminer S9, has a hash power of about 14 terahashes. And the S21s, they're like 140, so they're like 10x more powerful. So for every S9 replaced by an S21, you're actually 10xing hash rate. And of course, the next difficulty adjustment is due about 5 days after the halving anyway, which would largely render any hash rate that turns off completely moot, which is part of the genius of the Bitcoin protocol. Either way, the 4-year cycle will not die. At least it's not going to die this cycle. So you have the miner death spiral FUD, and then you have the super cycle where the halving won't matter anymore. We won't get a bull run. And that logic, the very first halving was, the rewards being reduced from 50 Bitcoin to 25 Bitcoin, and 25 isn't as impactful as 50. Well, that was wrong. Next halving, they said 2.5 Bitcoin isn't anywhere near as impactful as 25 Bitcoin. And that was wrong. And then they said 6.25 Bitcoin wasn't anywhere near as impactful as 12 Bitcoin. And that was wrong. And now their same people are saying that 3.125 Bitcoin is nowhere near as impactful as 6.25 Bitcoin. It's much, much more less significant than going from 50 to 25 was. So we're not going to have a bull run. I guess what I'm trying to say is if Bitcoin behaves like it has the last several cycles, we will see it start gently trending up. It'll probably go down, possibly go down after the halving because it has before. We often see the sell the news kind of mentality in anything. Bitcoin is not immune to that. So maybe by late this summer, we'll start noticing a gradual uptrend. And then by fall or maybe this winter, Thanksgiving to Christmas time, we will be solidly in the bull run and in the undeniable bull run. We won't necessarily be setting the peak. That might take a year to 18 months, but we're going to see another cycle. And again, I don't have a crystal ball. I could be proven wrong, but I don't think I am. I'm willing to make that assumption loud and clear. So the other thing that will probably happen is there will probably be an altcoin season like there has every other cycle where the altcoins ride the coattails of Bitcoin and they boom. And then even when Bitcoin peaks, they continue to trend upwards, as do all the scams. And there will be new scams we haven't even thought of yet, trying to take advantage of the less informed. Maybe nothing on the grand scale of FTX, but we'll see scams and we'll see an altcoin season, and then we'll have a crypto winter, and then we'll rinse and repeat. And I think it's going to be a long time with the price of Bitcoin increasing so dramatically that reducing the miner reward, the price of Bitcoin is outpacing the reduction in the number of Bitcoin. And even going from 6.25 to 3.125 or to 1.5, basically, when Bitcoin's worth $1 million, even if the miner reward is reduced to $1 million or even $500,000, if it's reduced to $500,000, that's still a tremendous amount of economic reward. So I don't see any reason why we lose the impact of the halving by the supply getting cut in half, because I think that will be more impactful than a miner reward, which we've seen going up. All right. The reason why we're here today is because today is DCA Wednesday, and every Wednesday we've been adding to our stack of Satoshis. Of course, if you are new to the show and you don't know what DCA is, DCA stands for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 143rd stack. We started stacking, our equal portion, we started stacking $20 worth of Bitcoin every Wednesday, that being our regular interval of weekly on Wednesdays, all the way back on July 28th, 2021, running up on 3 years before you know it. So far, we've stacked 142 times, stacking a total of $2,840 US, including just under $64 in fees, plus a little bit of a spread, and turned that into a stack of 9,182,608 sats. And we've done so at an average purchase price of $30,928.03, which is not too shabby, even with Bitcoin crashing all the way back down to 60,000 US dollars. Today, we're going to add to that stack as usual using the Cash App. I like Cash App because it's pretty darn easy to buy Bitcoin, especially in small amounts. I like them because they will allow me to transfer money to my Cash App immediately, buy Bitcoin with it immediately, transfer it to my hardware wallet immediately, and let me do so without a mining fee. So while they have a slightly higher fee for purchasing Bitcoin, like 2.25% as opposed to 1% or 1.5% for some other apps, those other apps will not let you do all those things. And almost all of them will charge you a mining fee to move your Bitcoin off the exchange. And with mining fees as high as they are, paying $5 to move your Bitcoin eats up those $45 fees for purchasing Bitcoin pretty darn fast. Of course, I'm not going to transfer $20 of the Bitcoin to my hardware wallet because that would become dust. I've spoken about that at length in other episodes. I'm not going to get into that today, but if you are new to this podcast, you might want to tune into some of the older podcasts where we talk about why you might want to have more like 1 million Satoshis before you move your Bitcoin to your hardware wallet, so you don't end up paying a huge percentage of your Bitcoin in mining fees just to send it to somebody to pay for something or to move it to an exchange or to move it to another hardware wallet. Cash App is not a sponsor of the show. We have no sponsors of the show. I do have a referral code in the show notes, so if you like the idea of using Cash App and you're not already using it, currently I think you'll get $5 for signing up for Cash App using our referral code, and the podcast will get $5 too. That's subject to change. Who knows when you'll be listening to this podcast? But at the moment, I think you get, the deal is you'll get $5 and you'll tip the podcast $5. So you'll help support the podcast. You'll get paid for doing so, and you can turn that $5 into more sats. All right, I already have Bitcoin on my Cash App, as I often do. So all I have to do is open my Cash App for starters. That'd be a good way to start. And then click on Bitcoin, tap buy, enter $20, tap confirm, and boom! Just like that, we've stacked another 31,776 sats. That is more than 4,000 sats more than we were able to stack last week, because we purchased for more than $10,000 less expensive per Bitcoin. And as a side effect, I was worried last week we were going to break that next psychological level and bump our average cost basis up to 31,000, but we did not. Because Bitcoin is $10,000 cheaper in US dollar terms today, we only increased our average cost basis by $12.55, raising it to just $30,940.58, which is not too shabby. Most importantly, those 31,776 sats increased our stack to 9,214,384 sats. If prices stay low just a couple of more months, we're getting closer to my kind of semi-official current goal of 10 million sats for this podcast. And for a while, I was really worried we were never going to get there, because as Bitcoin was rocketing in price, the number of sats we were getting for just our $20 purchase was declining, making it harder and harder to stack those extra, 800,000 sats we needed to round off to 10 million. 10 million is just a nice round number. I've often talked about how humans like nice round numbers. We're creatures of habit. Most of us are numbers people already anyway, so we like nice round numbers. So I'm not going to stop stacking necessarily at 10 million, but it's just my next goal. And if you've been in Bitcoin for any length of time, your stacking goals will change. At one point in time, the goal was stack whatever, but then it kind of became 6.15 Bitcoin was the meme that American HODL put out there. And then largely that became pretty unrealistic. So the meme was just the goal most people had was get to 1 Bitcoin. And then, Bitcoin was only like $1,000. So that was a pretty worthy goal for a lot of people. But then Bitcoin got more expensive, and then maybe your goal was a half a Bitcoin, or in this case, a tenth of a Bitcoin, might be your goal. But then you achieve it eventually, and then you move that goal. So maybe your goal was maybe our goal right now is a tenth of a Bitcoin, and then we move it up to a quarter of a Bitcoin, or a half a Bitcoin, or ultimately 1 Bitcoin. It's a you do you thing, but my point is those goals change. But at the moment, my unofficial goal is 10 million sats for this podcast, and that'd be really cool. And we're really close to it at 9.2 million sats. And as long as the price doesn't explode, adding 30 some thousand sats every week, 120,000 sats a month, it would only take 6 months or so to reach that goal. So that's really cool. That's the side effect of Bitcoin being cheaper, which makes me a happy camper. Either way, if we had YOLO'd in on July 28th, 2021, we'd have an average cost basis of 39,716. And that's providing we had all, 2,000, what did I say we've stacked? That we had all 2,200 or $2,860 dollars to invest all at once, since we're talking only $20 a week. That might have been a big stretch for a lot of people. So if you only had $100 to YOLO in, or $500 to YOLO in, your average cost basis would probably be even worse. But either way, 39,716 is respectable, but you'd have far fewer sats. I think it was more than 2 million fewer sats is what we've shown just in this 2.5 years of dollar cost averaging once a week. Perhaps equally important to those of you who are here for NGU, for number go up technology, when Bitcoin retakes its new all-time, or when Bitcoin eclipses $100,000 US dollars for the first time, that stack, without adding a single extra Satoshi, will have a value of $9,214.38, which is a particularly impressive stack, considering the average person in the United States doesn't even have $500 in their savings or saved up for retirement. That is obviously 18x that, almost 20x that. If Bitcoin hits 1 million one day, that stack, without adding so much as another Satoshi, will be $92,143.84, which will not make you Michael Saylor rich, but is a heck of a lot more than the average American has saved up in their savings account or even for their retirement. And who knows? Bitcoin may not even stop at 1 million. If hyper-Bitcoinization happens, which is where Bitcoin becomes the reserve currency of the world, we already have that works out to about, depending on how you look at it, you factor in lost coins in the equation, there's somewhere around 150,000 coins per person on the planet. So we already have we already have 100x that almost. Your stack would be 100 times larger than the average person on the planet could ever hope to achieve already at just $20 a week. So that's something that's really cool to think about. 1 second while I look at my other monitor here. All right. That's about all I wanted to talk about this weekend. I've been rolling for significantly longer than I thought I would be today. I didn't have a whole lot of things that I was planning on covering, and it took far longer to go over them all. I guess it's because I'm just excited about Bitcoin and like to talk about Bitcoin. But before I go, I want to ask you to help support the podcast. Of course, it's really cool if you help support us with Satoshis through the value for value model. If you send us sats in the form of a boost, we'll be happy to read those on the next episode of the Bitcoin Bulletin Podcast. But more importantly, I like hearing from you. So that's why I like boosts better than streaming, is because I like input. I like visualizing those of you that are listening. So I'm not just some dude in front of a microphone staring at a monitor. I'm talking to you directly in whatever country you might be in. And when I hear from you, it helps me visualize that. It's easy when you're listening to a podcast to visualize the podcaster because you know who they are. I don't know who a lot of the people listening are. I know who some of you are. And each time you help support the podcast, it helps me learn about more of you. But if you don't have the Satoshis to help support the podcast, you can do so just by helping feed the algorithm monster. And you can do that by following the podcast on Twitter at BTC Bulletin Pod. Again, at BTC Bulletin Pod. We don't have a lot of people on X following this podcast. I don't put a lot of time and effort into X. I wasn't really a big Twitter user. I was kind of a Bitcoin Reddit lurker. Didn't even have a Reddit account for the longest time. So I guess I wasn't really into Bitcoin social media other than as a listener, a consumer of media. But it would be nice to grow those numbers. And if we do grow those numbers, if you do follow us on Twitter at BTC Bulletin Pod, the more followers we have, the more engagement we get, the more likely we are to be featured and for someone to see our posts and maybe become interested and start listening to the podcast and become orange pilled and help start and grow a stack of Bitcoin alongside the rest of us plebs. You can also help support us by feeding that algorithm monster if you're listening on Apple Podcasts by re-enabling automatic downloads. As I've harped on for a couple of months now, Apple disabled automatic downloads for every podcast you were listening to if you didn't listen to like 2.5 episodes a week. We only record once a week, so unless you're going back and listening to 1.5 old episodes after you're done listening to this one, they turned off your automatic downloads. Automatic downloads are cool. I do that for all my favorite podcasts, not just because it helps feed that algorithm monster, but because if I'm on an airplane and I don't feel like paying for the Wi-Fi, or their Wi-Fi won't let you download a podcast, like plenty of the budget airlines, their Wi-Fi will let you text, and that's pretty much it. They'll let you stream whatever movies they have if you log into their server. But if your podcast isn't pre-downloaded, you ain't listening to it. And I know that even though my car has Wi-Fi and I enabled it for the trip so everyone riding with me could use their devices, for large swaths of my drive anyway, there wasn't reliable data. And I was on a major interstate most of the time. We were on Interstate 10, which is one of the major interstates going across the country. But there was plenty of times when internet and in data, even cellular data, was very lousy. So having podcasts automatically downloaded helps you and it helps us. It feeds that algorithm monster, which helps more people find out about us. Regardless of where you're listening, you can like the podcast episode or rate the podcast. If you give us a 5-star rating, that would really, really help support the podcast, feeding those algorithm monster numbers and exposing the podcast to more people. More importantly than supporting the podcast, though, I want to hear what you have to say. So if you are following us at BTC Bulletin Pod on Twitter, send me a DM. I'm not asking for sats. I just want to hear from you. So send me a DM. Let me know what you think. What do you enjoy about the podcast? What do you not like about the podcast? Are you confused by anything we spoke about on the podcast? Or if you just want to say hi and introduce yourself and say that you're a listener, that would be really awesome. If you're not on X/Twitter, we're also on Nostr. Our Nostr NPub is in the show notes. Just whatever app you're listening on, scroll down and you'll see all the show notes. If you're on neither, you can send me a good old-fashioned email. The email address for the podcast is bitcoinbulletin@protonmail.com. bitcoinbulletin@protonmail.com. All of this information is in those show notes. Last but not least, I talked about our referral code for Cash App. I also have a referral code for Strike and for Fold Card. From time to time, we might add different referral codes. Again, none of those are sponsors. If you use those services, you'll get your own referral code that you can give to friends and family. But if you don't, and you don't have a referral code to use, clicking on that referral code will help support the podcast as well, because in addition to getting for free whatever offer they're giving you, the podcast will get a little bit in return as well. Of course, you can also support us directly from the support link on Spotify, but that's usually talking terms of US dollars. And this is a Bitcoin podcast, so we prefer sats. Either way, don't forget to join us next Wednesday and every Wednesday while we grow that stack together. But until that time, keep on stacking those sats, you sexy sat stackers.